Hello traders and welcome to another video review. Today is Thursday, August 1st, 2024. Let's find out what's going on the economic calendar today. As you can see, I got only important and very important data results for today. Some of them were published overnight. Calcin manufacturing PMI data from China were worse than expected, number of 51.4 points with the actual number of 49.8, which means that the market participants are disappointed with the manufacturing PMI data from China. Nationwide HPI from the UK beats the expectations of 1.8% with the 2.1% actual number, which is better than the previous number of 1.5%. German manufacturing PMI data scheduled for release 5 to 10 at 10 o'clock. Eurozone manufacturing PMI data are expected to be released. In both cases, a decrease is expected. ECB economic bulletin is expected to be released at 10 o'clock. At 10:30 we got the manufacturing PMI data from the UK. This time market participants expect an increase from 50.9 points to 51.8 points. At 11 o'clock unemployment rate in Eurozone is expected to be released, and then at 1 o'clock we got Bank of England interest rate decision. The market participants expect the Bank of England to cut the rate from 5.25% to 5%. Together with the interest rate decision, we got the vote cut, and we got the meeting minutes. 30 minutes later, sorry, 1 hour later, we got the Bank of England inflation letter, and that's everything from the Bank of England for today. At 2:30 we got scheduled release of the initial jobless claims, unit labor costs, and non-farm productivity data from the USA. At 3:15 Bank of England Governor Bailey will give a speech, and at 4 o'clock we got data in form of the manufacturing PMI and manufacturing employment from the US. Of course, market participants expect at a slight hike from 48.5% point to 48.8 point. Atlanta Fed GDP now data are scheduled for release at 6:30, and Fed's balance sheet will be released at 10:30. Please remember that yesterday Fed left the interest rate intact at 5.5%, but mentioned the possible cut in September if data allow Fed to do this. So that's basically about the inflation, whether the inflation will be under the control or not. After this decision, the US stock indices rallied higher, and the dollar got weakened across the board. But let's not talk about it. Let's find out what's going on the charts, and here we start with the euro dollar. So after the decision, we got the movement to the downside from the trend line. As you can see, again, this trend line has been very strong, and it looks like the market is under the bearish pressure. The momentum is still below the level of 50. As you can see, very nice level is coming for help to the bears. So they are still pushing the market lower as long as we stay below the level of 50 on the RSI. So another test of the trend line, rejection, slight bounce, and now we are going lower. We are going lower towards the 50% of the last movement to the upside, so the 50% retracement. There is still possibility that we will break or test the level of 1.0789, and then 61% is located at 1.0777. This is the last level, the last resort for the bulls to gain the momentum to the upside and break above the trend line. If they won't do it, then of course we will see further deterioration, and that means the whole of this movement to the upside might be retraced soon. What is the cable doing ahead of the interest rate decision? Very clear rejection of the technical resistance, 1.2861. Now technical, very important technical resistance has been rejected. Very big movement to the downside. We are approaching 61% of the Fibonacci retracement, which is in line with the technical support. This level is 1.2775. As you can see, the same situation as it is on the euro dollar. We got this 50 point level on the RSI, and the market cannot break above this level. So the sentiment is negative, the outlook is bearish, bears are keeping the market under the control, and lower prices are expected. Next target 1.2777, 1.2740, and even 1.2707. The cable is positioning itself to the downside ahead of the data. Let's take a look at the US dollar index, because we talked about it yesterday, and now we are taking a look after the interest rate decision and Fed press conference. As you can see, we were rejected from the level of 104.77. Bearish engulfing pattern. Let me just zoom in. Bearish engulfing pattern, continuation to the downside. New low was made after the Fed decision, 103.83, but this is very nice hammer pattern. So it looks like the market wants to pull back a little bit here, which is why British pound and euro dollar are going down. So as you can see, US dollar index is going slightly up, but it might be reversed very quickly. We got this weak trend line here, and we know that if we will not break above 150 periods moving average, which is 104.22 and 104.43, then there might be some kind of a reversal test of the trend line, breakout down to the 103.63, where the swing low is. Right now, as the momentum is negative, the momentum is still below the level of 50, so please notice the fact that bears are in control of this market, despite the fact that we are bouncing a little bit towards the moving averages on the 4-hour chart. So this is the US dollar index. What the S&P 500 did, we got very nice rally. So again, our initial Elliott wave scenario, which was in form of the ABC correction to the downside, was apparently obviously correct. So we got the ABC to the downside completed, right? And right now we broke above all of this local technical resistance levels. So right now all of them are now technical support levels. So we will switch it the color code to green, so you know it's a technical support, and it looks like the market wants to go higher. This is the level where the 50% of the Fibonacci retracement should be. That's my best guess. So let me just allow to apply this Fibonacci retracement tool here, and yeah, it's the bulls broke above the 50% of the Fibonacci retracement. Now they are above they are about to test the 61% of the Fibonacci retracement of this ABC correction, and this level is roughly around 5,565. Then of course the high of the wave B is the target. The high of the wave B is 5,575. all right, so this is how the S&P 500 looks like. Many of this US indices seen this kind of a bounce to the upside and rally post Fed interest rate decision. Nasdaq, Dow Jones, and S&P 500, all of them were rallying a few percent up. And last but not least, the Bitcoin. What is Bitcoin doing? The Bitcoin at the 4-hour chart broke below this trend line, so we will not use this trend line anymore. The $70,000 level was clearly rejected. A little bit of the test of the trend line and the 100 periods moving average, breakout to the downside, and now this level is under the pressure. Let me just make this where's my arrow? There you go. This level here is the key level for the bulls, because it's been tested many times here, it's been tested here again, so it's a significant support. If we break below this level, then the next target might be way lower at $60,000, 59,907. so please keep an eye on the level of 63,401 that might be violated. But if we keep an eye on the RSI as well, we can clearly see that the RSI tries to bounce from the extremely overset conditions. Now the case is not that clear, because bulls will be fighting for this level for sure. If we see bullish engulfing pattern testing for 100 or 50 periods moving average, that's a good sign. We need a breakout above 50 and 100 periods moving average towards this level here in order to see the rebound from the extremely oversold market conditions. Otherwise, this level might be put under the pressure and the market will eventually test the lower levels on the Bitcoin. That's the situation post Fed interest rate decision. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.